Stocks break areas of key support. How far will this market fall? This is technical analysis of the stock market's update and forecast for the week of September 14, 2020. Hello traders, I'm Richard Graham. We're going to start by taking a look at the S&P 500. This is the 1 hour chart, and as you can see, we were in this channel for several weeks, and we finally hit the top of this channel, and as soon as we did, we sold off hard. In a matter of a couple of days, we had gone back and erased a couple of weeks worth of gains. At this point, we're sitting at a level. We hit this low that we last saw around the beginning of August. So we've erased a full month worth of gains in a very short period of time. In my last video, I had expected that we would continue to sell off, at least on the smaller time frames, because that's the trend on the shorter time frames. On the upper time frames, we're still in an upward trend. However, we did break this trend line right here, and that's why I cloned this trend line. I brought it down to here, and as you can see exactly what happened, another measured move, and that's where we bounced from. So we came up, and then we hit this area where we had some resistance, we had some previous support, a lot of trading here, and it just couldn't get past above it. And when that happened, we sold off hard again on the 9th and the 10th. And now we're sitting at a lower low on the smaller time frames. So like I said, it wiped out over a month of trading gains. Now, the thing is, we've broken through this trend line right here, and we hit it a couple of times and then tried to straddle it a little bit, and then on Friday, we sold off a little bit, came up, and now we're retesting that upward trend line. So there is a risk that we could sell down to the next area of major support, which could be here at 3284, but most traders are eyeing this level right here at 3200 because that would be another measured move down, somewhat equal to the one that we've already had. See, we sold from here to here, and so if we take this measured move and we move it down here, we'll get something close to the same amount of sell-off. So that's an area where we need to look at. Next week, it's possible we could get down to those levels, and if we do, I expect us to bounce up and retest these areas as resistance. Now, the other scenario is that we go up from here, and if we do that, that means we have to get through this level here, and then we have to get through this area here. This is our higher low. So on the smaller time frames here, well, let's drill it down to a 15-minute chart. And as you can see, over the last several trading days, ever since this sell-off started on the 3rd, we've experiencing lower lows and lower highs. So we had a lower low, a lower high, a lower low, a lower high, lower low, lower high, lower low, and a lower high. So the trend on the smaller time frames is still down. It's up on the higher time frames. We pull out to the daily chart, we see that we're still in this bull trend, and we're sitting above this major area of support right here where we had this island reversal that everybody's been looking at. This has been a key level. We had quite a time breaking out of it, and once we did, we bounced off it a few times, and then we came up to the next level, which was the all-time February highs. Zoom out, you see it right there. And then we had a time getting through that. We bounced up and hit the top of the trend line channel, and then we slammed down hard all the way down to the bottom of that channel, and then we slammed down even further. And now it looks like, at least on a candlestick pattern, these are considered bearish candles. And so if the momentum continues in the direction it's going, we could see the next level at about 3,200 for support. So that's an area where you want to look for possibly taking profits if you're short, possibly entering a long position. You're just going to have to drill down to the smaller time frame at that point and see if we can get some higher highs, higher lows. And once that happens, it might be an opportunity to get long again. So if it comes down here, we could bounce, get a few more higher highs and higher lows. Just keep in mind that you're going to have this overhead resistance. All of this trading could act as resistance, and we could fall further from there. If we do fall further from there, we have this other level right here at about 3,000. This is going to be another key level to watch. So what happens next week is going to be interesting. Like I said, The momentum is to the downside on the shorter time frames. You have to be aware of what could happen. The momentum could pick up and we could sell off quite hard. Anyway, those areas of support, 3,200 and 3,000. If we come into the trading week and start to get higher highs and higher lows, then I'll be glad to get long. Before we can consider getting long again, I'd like to see us get above this high here, possibly this area here. There's quite a bit of damage on the chart that needs to be repaired on the short-term time frame. Here we are on the weekly. We've had 2 red candles. Each candle represents 1 week of trading time. And so we're definitely in some bearish momentum. The last time we saw 2 red candles in a row was right here, although not much happened. If we get a big candle like we saw back here in February, that could take us all the way to 3,000. Be aware. These markets are dangerous if you're long right now. Let's take a look at the Nasdaq, the QQQ's ETF fund. We were in this strong uptrend ever since the March 23rd lows. And look what happened. We broke below this channel and we came back and retested the bottom of this upward sloping trend line, and we've headed down from there. Now, the good news is we are sitting at this level right here, which could act as some significant support on the Nasdaq, and it has. But the bad news is if we do break below this key level, it could bring us all the way down to this other area here where we had previous resistance acted as new support, and this could act as support as well. So if price does come down here, I do expect it to bounce up, possibly retest this area as new resistance, and then come down from there. This would be an opportunity to look forward to get short. Here's the small caps. The Russell 2000, we are sitting at a very important level of support as well. In fact, it looks like we kind of broke down below it. And now we've come back and retested it. So that's not good. We do have another level right here that we could come bounce down to and then come up. The small caps are looking bearish at this time. It's not looking bullish. So I would stay away from this market until we can repair some of this damage on the short term. The VIX is the fear index. It's the price of options on the S&P 500. And you see we spiked up to about 85 here in March when we had the big sell-off. Then when we had the island reversal, we spiked up again. Same thing, we went down into this declining wedge pattern, and then we spiked up recently. Now look what has happened. We've come back and hit this key level right here that acted as resistance, now could act as support. If the market starts to sell off this week, you can expect to see the VIX shoot up, possibly to somewhere in the 30s or the 40s. Look at this move right here. We could get an equal move up in the VIX. Anytime the VIX is trading above 20, it's time to be cautious. And right now it's at 26.9. Here's the VIX term structure. Sometime between now and expiration on October 20th, VIX futures traders are pricing in a move on the S&P 500 of 31.84%. The major cap-weighted stocks are what's really driving this market right now, and here's Apple. As you can see, we had this major run-up, and we've retraced about 50% of it. We are at a critical juncture. If we break this level of support, we don't have a lot beneath it. It could take us all the way down to the high 90s. Amazon broke this major trend line right here on September 4th. We came back and retested it, and we started heading down. Until the momentum improves on the short-term time frame, I wouldn't be long Amazon. Here's Microsoft. Same type of situation. We broke through this upward sloping trend line, came back and retested it, and now we're heading down. If we break this area right here, we could come all the way down to the next level of support, which is right around 189. Google, same type of situation. We broke the major trend line right here on September 4th, September 5th, came back and retested it on the 10th, and now we're heading back down again. Now, Facebook, unlike the other ones, still above this upward sloping trend line. Here's Tesla. It's holding up, but remember, we do have this area here. If it breaks down below this area, we could see a retest. The momentum in Tesla is still to the downside. Bitcoin on the daily chart here has been stuck in this trading range. As you can see, the momentum is to the downside. If we can get above this key level of around 10,500, then we're going to have this resistance here. So it's really important that we get above this area and then maybe buy in this area for a move to the upside. If not, we could see a move down to this area here where we last saw some major trading, right here at 92.50. TLT is long-term government bonds, and here we are stuck in this trading range, kind of a triangle pattern. Which way we break, up or down, is probably going to be inverse to the stocks. Here's gold. As you can see, we're in this long-term uptrend, and we've been stuck in this trading range for quite a while. Now, which way it breaks? Generally, precious metals are considered a hedge against the stock market. However, in March, when the stock started to sell off, gold sold off as well. It's because everybody was rushing into the dollar. Here's DXY. This is the ETF fund for the dollar, and it has been showing some strength recently. We finally broke out of this area, and we came back and retested it, and we're sitting right here above this trend line. However, on the long term, we are still in this long-term downtrend in the dollar. As long as the dollar's going down, that's supposed to be bullish. That's usually bullish for stocks and for precious metals. But keep your eye on the dollar, because if we do see a spike, that's going to be bad for stocks, and it's probably going to be bad for precious metals too. Speaking of precious metals, here's silver. This is SLV, the ETF fund for silver, and we're still stuck in this flag pattern, and these patterns do generally break to the upside. So I'm still bullish on silver and gold. Wednesday and Thursday are going to be the big fireworks days, I think, because we have retail sales and the Fed on Wednesday. And then on Thursday, we have building permits, jobless claims, and manufacturing. All right, guys, so that's the picture. This is a trader's market. We got support coming in at 3280 and then at 3200. Be careful out there. The momentum is to the downside, and it's strong. If you like these kind of videos, make sure you go ahead and subscribe right now so you don't miss my next video. Also, like the channel too. It really helps out with the YouTube algorithm. Thanks a lot, guys. Have fun trading this week. We'll see you next time.